Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another fresh new edition of Bazaar Morning Call, Thursday morning, running towards the end of the week. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Morning.
Hi, good morning. It's the start of a new month and here we are right in the middle of the year. I mean, who would have thought this year would pass by so quick, right?
Well, that's right. It's start of a new month. I'll tell you what, though the odds are not in favor in the month of June. I looked at the last 10 June months and the Nifty is down 6 out of 10 times. So it's mildly in favor of the bears on that front. But when you have a good month, you have a very, very good month as well, like 2020. So let's see which way it swings this time around. But new month.
Absolutely new month, and hopefully history doesn't repeat itself and the market doesn't have
half
a fall.
the year is left, by the way. So we're done with the year.
I look at the glass half full. You look at it half empty. That's not
Why
my
do you want
fault.
the year to go by so fast? It's okay, yeah. Markets, by the way, have been doing quite well.
Yeah.
So let's actually kick off with the latest and the Taza information this morning, right? And this has happened this morning. I'm talking about the US debt ceiling drama, which is now finally drawing to a close. A vote was scheduled for, US time, but early morning, our time, 6 a.m. Or so, our time. And the House has actually passed. The House of Representatives, which has got a Republican majority, has passed the bill quite easily. So it's gone through. Now, the next step is for the Senate to pass the bill, which will happen perhaps later, tomorrow, over the weekend. But it has to happen before the 5th of June. The deadline by all which is being pegged by many is the 5th of June. So it has to happen before that. Only after the Senate approves this will it land on the president's table for his signature, and then it takes shape. So, but it should happen. It's past the House now. I think it's a formality. So this drama is now finally perhaps going to be behind us. I looked at US equity futures. They were mildly in the red, but they're in the green, but not by very much. It's not a big rally or anything of that sort. Month-end choppiness skewed Wednesday's price action, the overnight price action. The changes will come up on your screen. The S&P down about 0.6%, the Nasdaq about 0.6% as well. I put out an article yesterday. I will probably put out some data this morning as well. 100% of the S&P 500's 10% rally in 2023 is led by 6 stocks. 500 stocks in the index, and 6 stocks have contributed 100% of the 10% rally. On the Nasdaq 100, it's the same 6 stocks contributing to 70% of Nasdaq's 30% rally this year so far. Nasdaq is up 30%. Who would have thought? So these are just incredible numbers, but the point is we are coming up into important sort of levels around which the upper end of the range that both these indices have traded in for the last 1.5 years or so. Now, what happened last night? 2 FOMC members who are also voters voiced their preference for a rate pause in June. In the Fed meeting, they said, well, we should perhaps go with a pause. And markets got excited, especially on the rate side. So the US 2-year, the 5-year, the 10-year, the 30-year yields all ended at intraday lows. So I think that is important. The dollar index also retraced. It hit a high of 104.7, but it finally closed at 104.15. Having said all of this, and of course the opinion is what prices reacted to, both the dollar and the yields, data tells you otherwise. So we had what is called the US JOLTS index, which is nothing but job openings in the US. That has come, for the month of April, that has come in extremely strong. And this is coming in right before the jobs number, which we will get tomorrow out of the US. And that's the big number which will decide Fed pricing one way or the other. So, while voters on the FOMC are saying perhaps a pause is warranted, data is saying that the labor market is still running very, very tight. Tomorrow's sort of indication will be very important. Here in India, yesterday, we saw a pullback. Both the Nifty and the Bank Nifty, they saw cuts. It was not a one-way kind of a move. There were attempts at a bit of a pullback late into the session. I just want to put out one thing. Yesterday, especially the NSE cash segment saw the second highest turnover ever in history. It's quite incredible. There was the MSCI factor as well. But that was, even adjusted for that, I think the numbers were extraordinary. The last 30 minutes yesterday was quite violent. And you got a sense that something was going on, but I mean, the MSCI kind of muddled things. But finally, at the end of the day, the volumes were the second highest in history. Now, the levels that you need to sort of work with, the resistance for the Nifty has moved up a little bit. It's basically the rising channel. The upper band of the channel is now moved up to about 18,800. If the uptrend has to stay intact, even with pullbacks, etc., it should not overlap 18,420. That's the lower level, which one needs to watch. The 20-day is still lower than 18,420, but we'll put that out as we go along. Bank Nifty must hold the 20-day moving average. That stands for the index at 43,745. We left off at 44,128 yesterday. And on the way up, the Bank Nifty for the uptrend needs to cross the recent high of 44,499, almost 44,500 or so, which was the recent high the index needs to take out. The SGX, I think, is indicating a softer touch, a softer start. Maybe as we head into the sort of 9 a.m. Start, things will moderate a little bit. It'll be perhaps a little better. The debt ceiling has gone through. We got the GDP numbers last night from India, which have come in and beaten expectations quite handsomely. So we'll see. 60 points lower. It was about 80 points down about 30 minutes back. So there is some improvement which seems to be coming through. Sonia.
Well, absolutely. I mean, this morning, it looks like it's going to be one of those mornings where once again the market is going to start on the back foot. But whether the dips get bought, time will tell, right?
Yeah.
Because for now, the run-up has been pretty smooth. I mean, it's a 10% rally that we've seen from the lows in March. So the market has covered a lot of ground. Just a couple of things. The flows continue to be on the mixed side. So yesterday as well, FIIs bought a bit, but DIIs have sold for a second straight day in the cash market. So domestic institutions sold to the tune of almost 2,500 crores. So big selling coming in from the domestic fraternity. And that is something that you perhaps just want to be a bit cautious about. Now, as we've been telling you, the US markets were also under pressure. This morning, Asia is also not looking good. The SGX Nifty is also down about 60 odd points. So that resistance level that the Nifty is facing continues to be at 18,600. That's the big resistance and the ceiling for the market in the near term. Doesn't look like there is any trigger which could take the market out of that level in the near term. A couple of local cues, as Prashant was also mentioning. The GDP numbers are good, but this is backdated information. Generally, the market already reacts to it. But nevertheless, no taking away from the fact that both FY23 as well as Q4 GDP data surprised positively, 7.2% coming in for FY23. But the data that I look forward to today is the auto sales for the month of May. And in that context, things have slowed down a bit. It's tepid for the passenger vehicle space. There's no major recovery in the two-wheeler sector. The medium and heavy commercial vehicle sector also has not recovered as much as what the street was expecting. So in that context, there could be sluggish data coming in from the auto sector. And the auto stocks have been the big movers. Let's see how it pans out today. But I think this resistance level of 18,600 could be a bit of a ceiling for the market for a while now, until we get any major cue on the upside.
Well, Sonia, yesterday was actually a very good trading session, because Prashant made that point about just a few stocks taking the Nasdaq and some indices higher. We've had that on the Nifty as well. But now we are seeing some broadening of this rally, which I think is heartening. Yesterday, for example, you had the Nifty that ended much lower, but you had the broader markets, both the mid-cap and the small-cap indices, well, they ended with solid gains. And take a look at that. Small-cap index up 1%. On a day, the Nifty is down 100 points. So a lot of portfolios actually would be feeling good. So it wasn't such a bad trading session. In fact, I would say it was a good session. Now, the key headline indices, well, they were under some pressure, but there was no big shorting or selling. As we know, yesterday was the MSCI rebalance as well. In fact, there was unwinding of long positions, particularly on the Nifty. I say that because the Nifty open interest was down by close to around 6%. Now, the range-bound trade is likely to continue, but I think it's with an upward bias, provided the 20 DMA holds out. What did the FIs do yesterday? Well, they were part of the unwinding. So they unwound close to 18,000 long contracts. They added some mild shorts. And now the short positioning at least is moving towards the halfway mark. So the flows have been good in the cash market, but you like some shorts in the system. If they get trapped on the wrong side, well, that's what gives their additional fillip. So that's why I say a net short market actually is desirable from a bullish perspective. The index option side, well, they're telling you that maybe at higher levels you'll see some selling because there were more than 1.5 lakh call contracts that were written. The PCR, we pointed out a couple of days ago that it had moved to the upper end of the band, close to around 1.4. Now it's at the midway of the band because the band has been 0.7 on the downside and on the upside around 1.4 odd. We had a couple of strikes that were very active, and I'm highlighting these strikes because today's expiry. 18,600 call, 18,500 put as well. Both of them were fairly active in trade yesterday. And just plugging in the premiums. Yesterday, the premium ended at around 25 rupees. At the start of the day, it was close to around 50 rupees. So you plug that in on the downside, 18,450. On the upside, 18,650. If you want to get in, you look to get in closer to around the lower level. That's 18,450 odd. The Nifty Bank, that as well had a bit of a down day, was down close to around 300 points odd. But the positioning is such out there that the 44,200 call, the premium at the start of the day was close to around 300 points. So it's trying to guard the upper levels of around 44,500. However, at lower levels, the 20-day DMA comes into play. We almost bounced off that mark yesterday, and yesterday's low as well. So 43,750, 43,800, crucial for the Nifty Bank to hold. If you want to go ahead and take a long trade, maybe closer to around 18,450 odd for risk reward with a bit of a stop loss given that today's expiry as well, and SGX Nifty suggesting a pullback.
Okay, and lots happening on the show. It is finally the end of the earnings season, so we can put that behind us, right? And there are a lot of reports coming through on how earnings has panned out this quarter. So let's get one of them going. On the equities front, first up, we have Gautam Dugar of Motilal Oswal Financial Services, who says that the Q4 FY23 corporate earnings were impressive but lopsided. The Nifty exits FY23 with an 11% EPS growth. They've reduced FY23 Nifty EPS by 0.6% to 807 from 812, largely due to notable downgrades coming into ONGC, Coal India and BPCL. FY24 EPS also saw a cut of 0.6% to 972 from 978 due to downgrades in ONGC, BPCL as well as Infosys.
Okay, let's get you some money market views as well. On the rupee, Parul Mittal Sinha of Standard Chartered says the USD INR traded in a narrow range last week. Dollar strength and hawkish Fed speak, higher inflation data and weaker yuan was probably offset by FPI flows of $6 billion in May and strong rupee fundamentals. She expects the rupee to trade between 82.85 to 82.25 to the dollar range for the next week. Adds that apart from the US dollar, focuses on oil prices with OPEC plus decision due on the 4th of June.
All right, and on the bonds, Parul Mittal Sinha says that the domestic bond yields traded range last week despite volatility in global rates on debt ceiling developments, even as easing domestic liquidity helped lower overnight rates. They see that Indian 10-year benchmark trade in a 6.95 to 7.1 range for the next week. Apart from global rates and oil prices, MPC decision is on June 8th. That's in focus, and Standard Chartered expects a pause on rates with no change in stance. Macro projections, but we'll keep a close watch on guidance on liquidity.
All right, Arvind Sanger is now joining us, managing partner at Geosphere Capital. Arvind, great to have you with us here on the program. It's been a while, Prashant this side. So I want to ask you two things. One is this debt drama in the US perhaps finally comes to a close this week. How will markets respond? One. And two, I was pointing out that the rally in the US market this year so far has been impressive. Nasdaq is up 30%, S&P is up 10%. It's done much better than most other markets around the world, but it's just 6 stocks which are responsible for 100% of the S&P's gains and about 70% of Nasdaq's gains. It's perhaps been the narrowest rally ever. What are the implications of that? Go on.
So first things first, I think the market has already discounted the debt deal. That was discounted, I think, when it became clear that the two sides had reached a deal, close to reaching a deal a week ago. So I don't think that is going to have much of an effect on the market. On the second point, I think it's a very interesting point. I think this is a very weak rally because a narrow rally like this is not a sign of a healthy market. And these things do not end well. Obviously, the next big event, in my opinion, is going to be the June FOMC. It's, the probability is swinging wildly. Just today, I think it went from 70% or so that they were going to raise 25 basis points to 30% because of a couple of Fed governors making more dovish comments. I've been on the camp that I think they take a pause right now, even if some of the jobs data and others suggest that things are still strong, because they have to give it a little bit of time to see how things play out. So my guess is that they've gone so far so quickly that they can afford to take a pause without, it's not like the economy is going to go rip-roaring away if they take a pause. So I think that probably might cause a little bit more of a rally, but I think this rally on its own is kind of run a lot ahead. And unless the broad-based market joins it, I think, there's recession risk. I mean, we got some data over this long weekend we just had, which showed that oil demand petroleum consumption was down something like 2.5–3%. That's a very significant, and this is despite prices being much lower this Memorial Day weekend. So those are signs of an economy that is probably already in recession, and therefore I think that this narrow rally may not last if that turns out to be the case.
Arvind, hi, good morning. The situation in India is very different, right? I mean, the macro environment has improved substantially. In FY23, the GDP has come in at 7.2%. The GST collections have been at record highs. The manufacturing PMI has come in at a 4-month high. And of course, our own markets are virtually at all-time highs. Do you think the Indian markets have priced in a lot of this positive macro situation, or is there more to go on the upside?
I believe a lot of the good news, short term is in. But I think if you're a medium to long term investor, India is clearly in a sweet spot. In fact, we're hosting a event in New York next week, saying that is this India's decade? And I think there's a lot of that talk around. But it's clear that India is in a sweet spot. I think if one takes a 12–24 month view, there's a lot that can go right. And therefore, we definitely believe that India is in a sweet spot. Short-term trading flows we have to be careful about. I think the pessimism on China is max about as much as I've ever seen. I think there could be a rebound there. So there can be some short-term swings, but on a structural basis, there's a lot that is going right with India. Part of it is obviously China's own doing, China plus one, but part of it is India's own position, its demographics, its infrastructure, its all of the things that I think suggest that India is in a sweet spot, and India's inflation is, extremely well contained, and therefore that gives room for RBI to stay restrained, and those are all positive factors for India's growth story.
Indeed. Hi, Arvind. Good morning. Arvind, you mentioned that the Fed could pause, and yes, the probability out there from mid-teens, it went up to 70%, now back to around the 30%. So let's see what the Fed does. But are you baking in a rate cut towards the end of this year, or do you believe that will come only in 2024?
Well, I think we could get a rate cut later in this year, but that's because I'm expecting a recession. Without a recession, rate cut doesn't happen, right? So the question is, why would the Fed cut rates? The Fed is not going to cut rates just because inflation comes down. I think inflation coming down is certainly, could amount to a rate cut over time. But my expectation is that given the strong employment has to come off. All of that means a recession has to come, and then the Fed cuts rate, because everything kind of follows when a recession happens, inflation comes down, and unemployment, which is the other major, right? There are two objectives that the Fed has. One is rates, and the other is one is inflation, and the other is employment. And so if we get inflation coming down, then I think that rate cut is likely. So I would not be surprised if towards the end of this year we get a rate cut, and that would be based on just that expectation that we're probably already entering into a recession.
Okay, got it. Arvind, so do you have a view on what markets do from here? I mean, at the index level and at a broader level here in India?
Well, I think the earnings season has been pretty decent. I think the outlook for fiscal 24 is strong. I'm not going to make any comments about the market in the next 30 days. Like, if China comes into vogue, if some of the commodities start moving, maybe India is not the one that people first gravitate to in that environment. So anything can happen if my short-term call on a China bounce, even if it's a dead cat bounce from an oversold condition, that I won't call. But I would, if I take up, slightly more long-term 6-month view, fiscal first quarter, second quarter earnings, I think we should continue to see strong trends. And I think in that sense, the Indian market is fine. Short term, I'm not so sure.
Okay, all right. You're not so sure short term. That's fine. But the Indian markets have had a really smooth run up until now. Hopefully, that's something that can continue. Arvind, thanks for stopping by and speaking to CNBC-TV18. Appreciate your thoughts. Let's slip into a quick break. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Don't go anywhere.
That's the boss's cabin. The canteen is behind. Good morning, ma'am. Good morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
This car's electric for more reasons than just being woke.
Oh yeah.
And man, the money it saves you is no joke. It's got enough range to get you anywhere!
And it's the go-to park when you get there.
The all-new MG Comet EV, the no-nonsense car.
Because just like us, this car cuts the crap, man.
तू है तो मुझे फिर और क्या चाहिए, तू है तो मुझे फिर और क्या चाहिए।
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC. LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
Welcome back to Bazaar Morning Call. It could be tricky today because the SGX Nifty is indicating a cut of about 50-55 points. But let's see how it goes. Right now, the bulls are still definitely have their, grip which is tight on the market. But let's see, profit taking in the last few days on the top line index, on the headline index is something that we have seen. But for today, our entire team is standing by with CNBC-TV18's list of top 10 stocks. Let's start off with Coal India. It's been in the news for the past couple of days. You're watching it today as well?
Well, that's right, Sonia. You got that price hike that the street was waiting for, and Dipam has gone ahead and said, now we want to sell some stake in the company. So timing as well is pretty much apt. Now, they've launched the OFS. The government, as of now, holds close to around 66% in the company. The base issue is close to around 1.5%. There's a green shoe option of another 1.5%. So, in all probability, there could be 3% that will be up for sale. Now, the floor price of the offer, well, it's at around 225, which is close to around 6.5% discount in comparison to yesterday's close price. For retail, well, it'll open tomorrow. For non-retail, it'll open today. And then tomorrow, both can participate as well. So just keep that in mind. Now, if the government does the entire 3% at the base price, then they'll garner close to around 4,150 crores, 4,160 crores to be precise. For Coal India, what works? Valuations. It trades at around 5.5 times. Dividend yield of close to around 8.5% odd, which is heartening. What doesn't work is e-auction prices have been coming in lower because international globe prices have come in down. Remember, that's bulk of their profitability, so they don't want to risk it in case e-auction prices fall further from here. And also, the price hikes were taken, that's good, but it takes care of only half of the entire employee cost spike. So, going with red out here because there's a sharp discount on that OFS. But Ekta is joining us to run us through a couple of those pharma stocks that she's tracking, Laurus Labs and Cipla. Ekta?
Thanks for that. Well, I'll start with Laurus, where they are increasing their stake in a cell and gene therapy company, ImmunoAct. So this particular company was founded in 2018. It is focusing on CAR T therapy, which is basically specifically for blood cancers. Currently, their drugs are in clinical trials. So Laurus Labs will be acquiring an additional 7.24% stake in the company for 80 crores. Remember, their earlier investment was in November 2021. They will now hold 33.86% stake in this company post the completion of the transaction. Cipla, the company was looking to sell around 51% stake in their Uganda arm for around $25 to $30 million. The deal was expected to be completed on or before 31st July. They have informed the exchanges that the timeline is subject to receipt of regulatory approval plus conditions of the SPA, which is the share purchase agreement. Hence the timeline of completion may be extended as per the mutually agreed timelines between the two parties.
Okay, all right, Ekta, thanks a lot for that. But let's go to Abhishek now. He's tracking Spandana Spurti this morning. Abhishek, why is that?
Well, as per news report that is in Economic Times, Spandana Spurti's founder, that is Padmaja, is planning to offload part of her 14.5% stake that she has in the company. So she had stepped down as MD of the company about 1.5 years ago, and she aims to get about rupees 100 crore from this stake sale. Remember that this will be the initial divestment. Her stake is actually valued at 725 crores. So she's also planning to secure a separate NBFC MFI license. Her current stake, as I mentioned, is valued at about 725 crores. So this may be around 14% of her stake that she is planning to offload. She has had an investment banker for the same, and out of this 100 crore that she intends to garner, about rupees 40 crore will be used to repay her debts on the pledge shares that she has with IIFL Finance. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Mangalam joins us to run us through some more stocks that are on the news today. Morning, Mangalam.
Good morning. So I have 3 stocks on my list. We start with HIL. There's been a strike at the Chennai plant of the company. So until that subsides, we may see some sort of production impact out there. Even if not that, there would be some uncertainty. You see some red out there on HIL. Did well in yesterday's trading session. MOIL is the other one that I'm looking at. They've increased the prices of a few grades of fines by about 10% so mild positive out there as well. And finally, Dredging Corp, an interesting one out here because the government has actually removed, and it's the word removed, GYV Victor from the services of the company as MD and CEO. This is under provisions of the conduct, discipline and, a performance sort of act coming in for the company. So it'll be an interesting one, mainly because the removal of MD and CEO is sentiment negative, but does that mean a change in management could change the fortune of the company as well? So the lows on this stock today is something that I'll be watching out for closely.
All right, Mangalam, thanks very much for that. Now, we've seen a price cut for propane gas, and Gujarat Gas and GAIL here perhaps could be impacted. Sonal is here with more details. Sonal.
Thank you so much for that. Well, the news is that Saudi Aramco, the biggest producer of propane, they have cut prices sharply to $450 per ton, and the cut is around $105 per ton. Now, why will it impact Gujarat Gas and GAIL? Because remember, propane is a competition product for Gujarat Gas, and propane is a product for GAIL. So while it will be negative for Gujarat Gas because prices have been cut, it will also be negative for GAIL because prices have been cut here. Now, Saudi Aramco says they have cut this because of ample supplies that they're getting in Middle East and US, and there's low petchem demand coming in from China as well, so a price cut was important. This would be implemented in India from July because this pricing is always done with a 1-month lag here. July propane now, it would become 16 to 17% cheaper versus Gujarat Gas price. Now remember, Gujarat Gas has taken 5 price cuts so far, one because of lower spot LNG prices, also because propane was always cheaper than Gujarat Gas, and that's why all their customers were going to consume propane. So that was leading to a lower volume for Gujarat Gas. Now with this price cut, again, propane becomes cheaper than Gujarat Gas, so it's negative for them. GAIL also, it is a negative because in the liquid hydrocarbon segment where they produce propane, the spreads would become lower. Analysts say against this, OMCs will earn better LPG marketing margins because they will be able to price it at a higher price. But still, at some point in time, OMCs will also cut prices here. So it's a negative for Gujarat Gas because it's a competition product, and negative for GAIL because spreads will be lower.
All right, thanks a lot for that. Now I'm watching out for the aviation stocks very closely, particularly Interglobe Aviation. That's because jet fuel prices have been cut significantly in Delhi to about 89,300 rupees per kiloliter. This is from 95,900 earlier. So that, of course, is positive for Interglobe Aviation. But even the domestic air traffic has been very strong. The recent data that came in from the DGCA was that air traffic has hit record highs in the month of April. So that, of course, is another positive for Interglobe Aviation. Remember, Go First has cancelled all their scheduled flights till the 4th of June. So Indigo and SpiceJet will benefit from that as well. But all of this perhaps is factored into the stock. If you look at the stock performance, and if my director can just pull up a 3-month chart, this is the last 1 month, of course, 17%. In 3 months, the Interglobe Aviation stock is up 30%, perhaps pricing in a lot of the good news. But of course, a fall in ATF prices is definitely positive for the entire sector. You want to take us through a quick recap?
Yeah, let's do a quick recap then of all the stocks we just discussed for you. Stocks with positive news flow, they include Laurus Labs, Spandana Spurti, MOIL and Interglobe Aviation. While stocks with negative news flow include Coal India, Cipla, HIL, Dredging, Gujarat Gas, as well as GAIL. Well, that's about all the stocks that are in the news. But let's turn our attention away from the equity markets and focus on the commodity space. Manisha Gupta joins us, as always, to give us a complete roundup. Morning, Manisha.
Well, morning. Looking at the crude oil prices right now, which are trading at a 4-week lows, and we have seen 10% of decline for the month of May. The Asian markets right now seem slightly supportive as the U.S. debt ceiling passes House vote, and then the cakes in China general manufacturing PMI has come in at 50.9 versus 49.5 in the previous month. So these couple of factors clearly seem supportive right now. But the street will also watch out for the U.S. crude inventories. Well, that data gets released today. And then you have the 4th June OPEC and allies meeting. Friday brings you the U.S. non-farm payroll data, so it's going to be quite a volatile crude oil prices. But the markets do believe that $70 a barrel is a strong support. If that gives away, then you could be looking at further losses coming in for this one.
Okay, thanks a lot for that. But the big news that came in, right? India's fourth quarter GDP has come in much higher than estimated at 6.1% versus a poll that CNBC put out of 5.1%. So it's a big beat. As a result, the full year GDP has also come in much higher at 7.2% versus market estimates of 7%. A bunch of economists from banks like SBI, Citi and JP Morgan have now raised their FY24 forecast to above 6%. Great news coming through. Lata is joining in to give us more details on that. Lata.
Well, what did the economy do? It scored a 6. That's very important. I mean, 6.1 wasn't anyone's guess. Nowhere near even the upper end of our forecast range. We had 5.5 couple of poll respondents. So that's a very big surprise. And obviously, because of that, arithmetically, the full year also goes up to 7.2 from the earlier 7% forecast. Economy fired on almost all cylinders. That's very big. I guess that's a 6 as well because, agriculture, 5.5%, manufacture, 4.5%. I'll call 4.5% good because the estimates I got was between 1 and 2%. So, that's also a very good performance. Power, gas, other utilities, 6.9. That was always expected. Power has been good all through the year. Construction, 10.5. No one expected, though double digits were expected. The trade, hotels, transport and communication. This is a huge, largely MSME informal sector. Your Udupi hotels, ST buses and all come in that. That's at 9.2. And again, on expected lines, but that shows the recovery of the economy. Let me come to GDP from the expenditure side. All these are from the output side. From the expenditure side, the country has spent a lot of money on capital formation. 35% of the GDP. That's an 8.9% growth. Again, very good news for the economy and even for the stock markets. And to the loan factor, which I would say is a huge negative, that is personal final consumption expenditure growing only by 2.8%. And that may be one factor why at least some economists are not yet revising the forecast for FY24 higher, just to worry that the multiplier effect of growth is not yet happening. Net exports is also something we take into account, imports minus exports. Clearly, imports have been weak. That adds to the economy in the sense that, you're subtracting less, but that also signifies a lower ability to absorb imports. And that could be a bit of a worry. And these are deflated numbers. You can't see because prices fell, because this is real numbers already adjusted for inflation. But it's the positives that clearly outweigh. And so we have a string of forecasts upgrades. SBI is the one that stands at the top from 6.2 earlier. They were already higher than the bunch. They come to 6.7. For the first time, somebody is higher than RBI. Until now, RBI's forecast at 6.5 was the highest. Now somebody's climbed higher. Citi has revised up from 5.9 to 6.2. JP Morgan was at a very, very pessimistic 5. They've come to 5.5. But still, that's a 50 basis points increase. Morgan Stanley was at 6.2 and they see no reason to go higher than that. Again, all these are the ones that haven't revised. CLSA 5.5 remains 5.5. HSBC 5.5 remains 5.5. MK says 5.7 and the 5.7 new has an upside risk. But I must add that policymakers are extremely thrilled. You heard the chief economic advisor yesterday saying that they were going with a forecast of 6.5 and they were told there would be downside risks. Now it is risks evenly balanced. And the person who's having the last laugh is, of course, the Reserve Bank. Always stood with 6.5 and now the market's falling in line.
All right, Lata, thanks very much for that. And I think markets will take heart from that. They're in a tough year like this where global growth has been a big sort of area of challenge. Growth here is actually much better than what it was expected to be. Well, we'll take a very quick break here. Up next, Deepan Mehta of Elixir Equities will be joining in for a quick fundamental check on things. Lots of stock discussion coming up with him. A little later after that, we also have the management of Mishra Dhatu Nigam to talk about their fourth quarter earnings. Stay tuned.
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं। जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी। सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी? हमने वो भी पहुंचा दी। कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया। बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए। मुश्किलों की नहीं सुनते, हम करके दिखाते हैं। अदानी, हम करके दिखाते हैं।
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से, नहीं?
आपको
नहीं
नहीं तो
कोई बात नहीं मूर्ति, गलतियां होती रहती हैं, कोई जरूरत नहीं है चेक करने की। नहीं मूर्ति, कोई फायदा नहीं, कोई जरूरत नहीं।
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Welcome back to Bazaar Morning Call. Well, let's do one thing. Let's get straight to some individual stocks as well as, corporate voices. An important voice from the corporate world. On the sidelines of the Vedanta town hall held last afternoon in Delhi, Nigel actually exclusively spoke to the company's chairman, Anil Agarwal, on India's ability to produce semiconductors and the debt reduction plans of the company. Let's listen in and then, we'll get our guests to weigh in as well.
Semiconductors, these are the very technical. We are very comfortable, and this question will come and go, and whether 29 or 30 or 20, we are fully equipped. We have a David Reed, who is the pioneer of making semiconductor. He is hiring 400 people to make this happen. We have already selected the site of Gujarat, and government is with us shoulder to shoulder. I don't even think that how the payment will be made, because we have a cash flow and this payment will be made. So as far as our debt equity ratio is very comfortable. Our banks, lenders, everybody is very, very comfortable. My dream, my vision is in few years, I will have a zero debt company.
All right, well, that was Mr. Anil Agarwal. And, on that town hall itself, we had a lot of shareholders that asked a lot of queries. And one thing that stood out was a lot of them idealize Mr. Agarwal as well in terms of his journey. But in terms of a stock performance, well, we have Mr. Dipan Mehta, Director of LXR Equities, who joins us. Hi, Dipan. Dipan, what's your view on Vedanta? 270, 280, that's been the broad range out there. Now, Mr. Agarwal says that don't worry about the debt at Vedanta Resources. He is looking at shareholder value, wants to pay out dividends. At one point of time, he also suggested maybe there could be a bonus in the offering if the board recommends it. What's your view?
Yeah, good morning, Nigel, and thank you for having me on your show. I think you know my view. We have discussed metal stocks many times on your shows. And, as a long-term investor, I just can't stomach the volatility which comes with these metal stocks. And you need the right different type of a mindset to invest in these companies. Deep contrarian type of strategy only works over here. And I think that Vedanta and a lot of the other metal stocks are getting to levels where they'll be extremely attractive. And then it's been like almost a year or so where prices of commodities have been declining. Maybe give it another year of such declining prices, and then the cyclicality will start to come in and these prices will start to move up. But at this point of time, I think from an investor perspective, there are many other choices outside of the metal space where investors could look at. I think next 1 to 2 years looks very exciting for the metal consumers rather than the metal producers, and that's where I think we need to focus on.
Okay, well, the other thing I wanted to speak about is the auto sales for the month of May. And Dipan, I wanted your thoughts on that. This time expected to be slightly subdued, especially in spaces like two-wheelers. Even medium and heavy commercial vehicles have not grown as much as perhaps what the street was expecting. What do you do? Are there any stocks within this basket that you still like, or would you stay away entirely?
See, good morning, Sonia. I think in the two-wheeler space, we need to be selective. And I think I'm looking forward to Eicher Motors numbers, especially how Royal Enfield has performed. And I think the quarterly results were pretty decent for Eicher, and hopefully monthly numbers also will come through. They have a huge export opportunity, and they've expanded the distribution network, which should enable them to sustain decent monthly growth rates. And overall in the auto industry, our preferences for the passenger vehicles, where there are huge waiting lists. We heard what M&M had to say, and even Maruti, which is doubling its capacity. So I think new models which are coming through are certainly reducing the life of ownership, and therefore we are having more churn. And that's a good proposition for the OEMs like, say, Maruti or M&M, and that's where I think investors can get some amount of outperformance. Ashok Leyland also is an interesting company, purely focused on medium and commercial heavy vehicles. And I think those numbers also could be pretty decent. Valuations are reasonable. And again, they have a huge export opportunity as well. So these are the four companies, Ashok Leyland, Maruti, M&M and Eicher Motors within the auto space, which are looking quite interesting. But also auto ancillary also looks, there are some very good performers over there as well.
Okay, all right, Dipan, request you to just stay with us for a bit. We are welcoming our first corporate on the show. Mishra Dhatu Nigam is on our radar. The quarter four numbers were fairly decent. The company witnessed some kind of improvement, though, on the margins on a sequential basis. Dr. Sanjay Kumar Jha, the CMD at the company, joins us on the show. Good morning, Dr. Jha. Thanks so much for joining in. Well, last year, we were gunning for around 1,000 crores of revenues, but it seems you've fallen short a little bit on that. Now, on this base of around 875 crores, what kind of a revenue growth number are you looking at? In the past, on margins, you've mentioned it will be in the vicinity of around 28 to 30%. For FY24 as well, you'll stick to that?
Stick to that. See what happened. First of all, why there was a dip, we could not achieve 1,000 crores. It's mainly due to supply chain issues, because you know that raw material has been one of the major issues for a company like us, where we have to depend on some of the overseas companies. So in the last moment, we could not able to get certain raw materials, which has affected us. But I think now we are going to make up when we are opening with this FY24. And I think those things will be reflected as we progress, and from quarter 1 to quarter 2, quarter 3, and so on.
All right. This is what Dr. Jha, give us a couple of numbers then. 1,000 crores didn't come about because of supply issues. It appears most of that is sorted out right now. So for this year, that's FY24, what kind of a revenue number you're looking at, what kind of margins you're looking at, and also give us an insight into working capital, because your inventory has gone up. So 3 quick numbers.
Inventory has gone up not in terms of volume, because of in terms of the price, because the raw material costs have gone up, and which has really affected. And definitely whatever you have, the work in progress will be evaluated at the higher cost. So I think that has been one of the reasons for going it on the higher side. But as far as the revenue for FY24 is concerned, we are very much targeting almost a growth of not less than 20. And that we'll see in our, in fact, the quarter results also. And our mainly the investment which we have made for our armor facility, and as well as some of the capital equipment has come to the operation, which includes our white plate mill. I think those two facilities are going to contribute a lot. Already only 1 quarter of last quarter only we have got the output from our armor facility, which is in the Rohtak, Haryana. And there we have got very good numbers. 32 crores was the sales from in one single quarter. So, and we are starting with a good order book for the armor. So I feel now that it's going to pick up, it's going to give a good contribution. And also the white plate mill which we have commissioned, there also we have certified the products required for the defense and aerospace application. So those things also are going to be a good sales in the future, and especially requirements coming from the energy sector, because a lot of requirements are there for special grades of plates and seats, which we have already technology we have developed and we are supplying regularly. That market also is very good.
Mr. Jha, good morning. If you can just tell us what is the potential that you see in the business from the export market? What is it currently at in terms of a contribution, and how much can you grow it to, if at all?
Export last year we have made 32 crores around, and it was mainly the direct export. If you see our previous export data, it was basically the combination of deemed export was there. So this is the type of, we have now direct export increased. And more than that, whatever those international companies who have already certified our products now it is converting in the form of the volume. Earlier, they have taken the trial. So previous year, if you see the many companies, they have taken the material from us for doing their testing certification. I think there now we are getting a good requirements are coming, which includes getting aerospace, oil and gas, and other companies.
Okay, all right. Final question then. The OFS, the last time around as well you mentioned, but there's no sign as of yet now. Do you think this year we'll see an OFS? Coal India, by the way, there's an OFS that's announced, but on Midani we haven't yet announced.
Yeah, I think it is given to the DIPAM is working on that, and I think it was supposed to come last year only, but I think again they are looking towards that. So due to that, I think probably maybe this year they may take up, but we are not having this company is not involved in that activities.
Got it.
It is taken care by the DIPAM.
Thanks very much. Appreciate you joining in with some of that perspective. Well, let's get back to the market where all the action is. And Anuj is here in the studios as well with a quick check on how he's looking at things. Anuj, hi, morning.
Morning, Prashant, Sonia, Nigel. Well, you know what? We had this last hour magic because of MSCI yesterday. Otherwise, the market had given you a bit of a breakdown. We mentioned in the morning also that perhaps the risk reward is not in your favor right now. The most important parameter was Kotak Mahindra Bank. It closed at 2014 in cash and 1957 in futures. So straight away today, it's likely to start 2 to 3% lower. And that could have an impact because that was the only stock which led that 300-point bank nifty recovery. In fact, there was delivery volume of 12,000 crore in Kotak Mahindra Bank, and FII gross volumes were all-time high. X of that, actually, the net FI number is a bit of a disappointment because, there was quite a bit of selling in HDFC, Twins and Reliance. All these stocks actually ended at the lowest point of the day. It was only Kotak which led that recovery. So, again, I would say that, the market needs some kind of a healthy correction before it comes into some kind of buy zone. Though this big decline in commodity prices plus the big GDP cheer, I think that might help on margin. On the Nifty, the near-term outlook is both sell on rally and buy on dips. Playing on the edges is working. Yesterday's low of 18,483 is the first important level, and the 20-day simple and 20-day exponential moving average zone is placed at 18,300 to 18,325. That remains your sacrosanct support. My sense is Bank Nifty unlikely to support Nifty, and bulk of the work needs to be done by IT, autos and FMCG because of the crude decline. On the Bank Nifty, the option base is 44,300 to 44,368, and the higher resistance is at 44,500, which was the recent high. And support comes in at 43,900 to 43,930, going by the put options base. And the bigger support zone, of course, is 43,822, yesterday's low. If that starts to break, I think that's sign of trouble.
All right, Anuj, thanks a lot for that. So those are the market cues that are lined up for today. Let's slip into a quick break. Up next, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Do stay tuned in.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell. Right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
Dadu.
Yes?
What does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops. But Dad, this time even if the petrol is over, our car won't stop. How come? With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue. That means our journey of happiness will continue non-stop.
LIC हर पल आपके साथ.
Helps beat sensitivity fast. Sensodyne Rapid Relief.
तू है तो मुझे फिर और क्या चाहिए, तू है तो मुझे फिर और क्या चाहिए.
We don't just design new cars. We create new ways to design all cars. In fact, we make the whole world of India's mobility new forever.
I'm a chameleon. It's my job to change color. But your wealth manager, well, they shouldn't be copying me, you know. You know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. The SGX Nifty is indicating a bit of a pullback to kickstart trade. Now, those, cut has got a little bit deeper. At one point of time, it was indicating a 35 to 40 point downtake. But let's see how you trade from here. Mitesh Thakkar and Sudarshan Sukhani joins us to help us with just that. Good morning, gentlemen. Thanks so much for speaking to us as always. Sudarshan, you go first. Tell us what's your call on the Nifty. We had a bit of a down day yesterday, and today there's going to be a gap down of around 70 points. How would you trade it?
Yeah, good morning, Nigel. See, the Nifty is in an uptrend. 18,500 is not bearish. It just means that we are entering a choppy market after a big up move. That's normal for the markets, especially for indices. The Nifty goes up, it starts chopping, it goes sideways, and then I presume it goes up again, so far as the bull market is intact. So the trade remains for intraday traders. It's the same trade that we have talked about for the last 2 days. From the opening price, wait for a 100-point dip and consider buying. Yesterday, this trade worked out, and who knows, it may work out today. For positional traders, wait patiently. The Nifty should come down. If it comes down towards 18,350, that's an entry opportunity. But for intraday traders, a 100-point dip is a buy.
Oh.
Gentlemen, morning. Mitesh, what about you? How are you looking at things?
Morning, Prashant. So I think, my sense is that the indices will possibly see a good degree of consolidation. The key level to watch on the Nifty is around 18,450. That was the high which we made on the 15th of May. If that breaks, then I think we'll look at lower levels of 18,250. But I think for the timing, 18,450, 18,650 looks like to be the range. Similarly, on the Bank Nifty, 43,900 and 43,500 are two support areas, and on the upside, I think the recent highs of 44,450 will be a difficult hurdle to get past. So it will be a market which will possibly be sideways for the next many days. I think next 4-5 days could be spent consolidating. But yes, I think I will agree with Sudarshan because the broader trend is on the upside. Declines to the support levels which I mentioned, I think would be areas to explore long positions.
All right, let's do one thing. Let's talk about individual stocks then. Sudarshan, good morning. What are you looking at to buy and sell in this market, given that, the run-up has been pretty sharp, but now even the cool-off is pretty intense. So what do you do at a time like this?
Yeah, good morning, Sonia. See, the run-off is sharp, but some stocks have run up before the market did. So they are consolidating and perhaps they are ready for another breakout. Hind Petro is one of them. It's been sideways for a month. It did not participate in the current rally, but that simply means that it had done its own bit earlier. So Hind Petro is a buying opportunity with a stop under 256. Power Grid is an intraday short. The stock has been falling for different reasons which I don't understand. But anyway, on the chart it's falling. Stop above 236, only intraday short. GNFC is another intraday short. After that big decline about 10 days ago, it hasn't recovered. That tells us there is some sense of weakness. Sell intraday with a stop above 598. And finally, my favorite, HAL, Hindustan Aeronautics. That's a buy again. Buy it, but keep it a positional buy. Buy with a stop under 3,000.
All right. Got that. Mitesh, what about you? What are your trades?
So on the stock side, I have a mix of buys and sells. Just give me a minute. Yeah, sorry. I have a mix of buys and sells. On the buying side is Coforge with a stop at 4,500 for targets of 4,650. PI Industries is a buy with a stop at 3,550 for targets of 3,750. And on the sell side is HDFC Limited with a stop at 2,665 or just above that, and a target of 2,590. And Gas Authority is a sell with a stop at 106.5 for targets of around 101.
All right, 3 buys and 1 sell. Mitesh and Sudarshan, thank you very much. We'll speak with you soon again. We take a quick commercial break here. There's 5 minutes to go for the pre-open session. We're back in just a bit.